Hello and welcome again in the next live stream. Sorry, I hope it was a little bit educational this morning. For the people who watch later, enjoy the content and watch and learn. I have a very simple way of explaining how to read price action. So let's dive into it. Like the title of the video says, New York Open. So we're definitely gonna watch here in the kill zone New York, from New York from 14. Let's put this on New York so you see what's happening. You see the time here. So New York is already getting into the market. And yeah, let's get into the technical analysis. So this morning we established that we were in an uptrend and we called this an 80 pip move here. Didn't take the trade, but that's okay. Quickly open my other screens again and reset them. Okay, so if there's a position I can at least get in. And you see what's happening here. We analyze this zone as to be the golden zone in from this swing high to this swing low, and the other way around. This is the other golden zone. There's a FIP retracement that we see there, the 61% zone, and price didn't come into my preferred zone. That was the main reason why I didn't take the trade, and I had my doubts on my setup. So we're thinking in probabilities here and capital management instead of gambling. So good habits lead to good behavior, and good behavior leads to bigger profits. So that's my vision. Now on the daily, like I said this morning in the other video, you can go check that, I expect price to fill this complete gap on the hourly, and it's all gonna depend on what price is gonna do here, because if we're gonna see a close above these highs, that could be considered as a market structure shift and we could see more upside. But we have a day one fair value gap here. We definitely have some more downside before we're going up. So on the long term, I'm still looking for sells. In the short term, it seems that buying is definitely in order. Now we're gonna change some things here. This is being taken and we are trading inside that fair value gap. That's the golden zone to retrace to, but let me do this quickly. And we won't extend that too much to the right because it's blocking our view here. And this is what's got my interest now, that zone, because that's a beautiful inversed fair value gap zone here. So let's go see. We are over the zones that I'm drawing here. For me, it's overlapping confluences, and what I mean with that, there's a higher probability for the trade to play out. Like, look, you have this lower time frame golden zone that we established, this would be a great spot to look for the next setup. And what do I mean there? You know, we are in a downtrend, going up, seeing a retrace, going more up. That would be definitely a possibility for the coming days, weeks. I'm not predicting here, I'm just following my thought process. So let's clean a little bit on the lower time frames, because this is the 4-hour and you start to see that it's becoming a complicated chart with a lot of noise on it, what makes trading a little more complicated. So now we're watching here, you see we have this fair value gap and it hasn't been really completely used. There is still liquidity inside, but honestly I don't think we're gonna go back there now. I'm gonna take this line away, gonna take this away, going to take this away, this can go too. This was Friday's high, has been taken, but we can see there is a lot of liquidity building below here, and we closed above this fair value gap. This is an H1 inverse fair value gap now, and let's take this away. It's been used and it doesn't seem like it's giving a real strong reaction. Let me take that away too. This is the Asia range. We can take this away too. This is the ideal inverted fair value gap zone, but you see, let's put it back again for a minute. Let's go and see this one. We can color it inverted, and the order block definitely falls into that zone, but we see it has been tapped, so it's very useless to expect price to come back here after this move has been made. Let's look further. There's no more inverteds there except this one, but I'm gonna take this away too, because too much noise on my chart. Now the next key level that I would be looking in, you see we have a bearish fair value gap here, and New York is definitely gonna go after these highs. You see we have relative equal highs here. So my first option for today would be to look deeper into this breaker here. Let's go down a time frame. Let's put this one here. This would be our breaker, the top of the breaker, and there is liquidity inside in the form of a fair value gap, and we are trading close, still close, because we're still trading inside this last swing high to this last swing low on the higher time frame. That's how I see it. So I keep following this 50% for my supply and demand, or for premium and discount. This definitely was a supply zone. You see there was a big and quick move down, but it price pushed through, so the next supply zone is here, and like I said, now we're looking for the draw on liquidity, as in the form of imbalances and equal or relative equal highs. So what are we doing? We are drawing out now where retail, and I mean street money, people that do typical technical analysis, we want to know where they are putting their money. I thought I clicked on this. So there's money here, there's money here above these highs, there is, yeah, give us a swirl, thank you. Another one, it's like a private dancer. And there's money above here that should have our eagle eye focused. And there is money above this high. Because they're equal, it attracts like a magnet. And all the stops of the positions that people used here earlier with the swing down to new lower lows, they got in problems now. They're back to break even. So there's a lot of stop losses above these highs, and we have relative equal highs here. Let's put another purple line so we see all the relative equal highs clearly on our chart. Yes. Do I think we have to push through in one time? I don't know right now, but it's possible. But it's also what people expect to happen now. And I'm doing this to show the new guys in trading what smart money sees in the market. So there's stops above this high, there is stops above these highs, and there's stops inside this range where people just feel safe. Just to give you an idea, price is already taking these positions into trouble. They're in a loss now. If people have their stop losses very small here, and price would decide to do this and take out these stops, that will give us an extra push to go after these stops and maybe even these ones. So taking that in consideration, let me take this away. That's why I'm saying I expect, because we had here, we had the continuation in last week Thursday, like a huge drop. Then we went like consolidation a little bit. It's an uptrend, but it's more like an accumulation. There is not a lot of volume on the hourly. And then we see that Asia follows the trend. So this night when Asia was trading, we saw price going up, and out of my journal I know if it would have been different, if we would have been trading up, coming back into Asia going up, I would have looked for a short close above the high of the Asian range. I would have just gone short here and uh, yeah, took the swing down. But things are different now. This is what's happening. But I expect New York to be, we have the accumulation, we have the manipulation happened at the end of London, and I I think we're gonna see a small retrace onto the order block or into the inverted fair value gap, and then see more upside. And there are no short-term equal lows except for here. But honestly, with this push up, we can clearly conclude that it's bullish enough to expect a retrace and another push to the upside. Now, how do we approach this? We're gonna be patient like we were this morning. We're gonna keep analyzing and reading price in the moment. And first of all, let's clear our charts because we really don't need all this noise here. I'm just doing that to show you guys why I trade and think the way that I think, because I see myself as a student of price and time. I study price and time, and then I see my analysis as valid or invalid based on my setups, their confluences. But we always have to follow the money. Where is the money here? There is a lot of money above here. There's money above here. But there's also now in the short term money in this fair value gap. And my first idea would be looking to buy below the candle open. Look what New York is dropping, so let's go to lower time frames. But the best place to buy would be below the candle open. And we created equal highs here, so I'm not convinced that we're gonna drop completely down. Can happen, but it's only 9 a.m. in New York, so they're not quite busy yet. I expect this to be a manipulation move. If I'm wrong and it drops, we had one meeting, no? Let me check again. At 3:45, that's in 30 minutes, but that ain't powerful enough. Ooh, look. Let's go to a lower time frame. This is beautiful to see. Look how they manipulate the market. Look how the price falls down in one candle. Should have we been in the move? Yeah, maybe, but like I said, I'm a student of price, and yeah, I'm a gambling man. I like taking risks, but it have to be calculated ones. And nobody can expect this to happen, that it just falls through, picks up all the liquidity out of the inverted fair value gap that is now again inverted. This one is inverted too now, so we're playing with fire here for the moment. Let's give these fair value gaps. This isn't inverted. Let's go check the lower time frames on the one. Let's see what happens here. We can take this liquidity line away because it doesn't exist anymore. Oh, that was the breaker that I said. We traded through the breaker through the top of the breaker, and we are now trading around 50% of the breakers. Beautiful to see. So let's dive into lower time frames, and like I said, it would be beautiful to buy below the candle open when New York midnight and the Asian low are taken out. That's definitely back into the possible now. Finding a short here is gonna be reasonably tough. Let's say that would be a great short position. And there's liquidity here too, but if you check with the FIB from here to the last swing high, this fair value gap is below the 50%, so for me it's an invalid fair value gap, so I won't put it on the chart. Now, what do we see? We respect this fair value gap. So yes, it broke certain PD arrays, and you see the selling volume coming in from New York. Those are big institutions pushing the price down. Although it's algorithmic, the algorithm is affected by million or billion-dollar transactions, but you're not gonna tell me that I can put these lines on the screen and they are traded to perfectly with the wicks or tails and get respected with whole candles. It's algorithmic. Just I'm pretty sure of that. So, but again, let's dive into the actual content. We said that this is below our reason now, so we're gonna take that away, because if we would consider selling, because what do we see here? First of all, this fair value gap, this piece is what? In the golden box. And let's quickly put the short term 50% FIB on the chart, and then we can take this away. This would be our target, and you see it's below. So if we get a retrace into this zone, then yeah, I'll probably go short, because you see this, we definitely break this structure. This is a market structure shift. So if we would see a retrace here, we could definitely see this one, and I'm interested in this piece of the FIB here, the 1.618. because I collected a lot of data about that, and there's just things that, let's say, caught my eye and keep repeating. So that would be a possible setup to investigate. Let's take this away to keep the chart a little cleaner. What do we have here? Let's now go check the 3-minute chart. You see we have the reaction. Look how perfect these reactions take place. How can I predict this, that price is gonna react there? Okay, I'm clairvoyant, but that's the spiritual side of me, has little to do with trading. I can't predict, like look in my crystal globe in my room or whatever. I'm just kidding, by the way, and say like, oh, God send me the message that the price today is gonna go to 127,428. No, it doesn't work like that. It's algorithmic, and things you see being repeated, things you studied, things you learned. And look, we're practically 50% in the middle of the gap. The wicks go just through that 3-minute fair value gap into the order block, and we get a reversal. Tell me I'm crazy, write in the comments what you think, but this is algorithmic, guys. Let's take this noise away. And what do we see now? If we're gonna drop him one time, we're not gonna try to catch a falling knife. It's not what we do, because if we would try to enter here on the break of this low, what would be a reasonable strategy, then we could target the low of the candle, because we definitely go then after all this liquidity. But look where we are now. Are we gonna take the risk of just pushing some buttons because we feel like price could go down? I don't think so. It's not a good idea. And due to the timing, you see it's 3:25 here, 9:25. The best time for me to trade now is, and let me take this to there, my best setups, I find them, and let me take this back to Madrid. My best setups, I find them between 4 and 5:30, and 5:30 here I'm already out of the market. Like, if I don't have my setup at 5, then I'll probably just keep my hands off instead of burning myself. Now look, so what are we looking for? A liquidity hunt. Yeah, we're definitely in a downtrend again. Look, we have the first market structure shift here. Let me do it like this. We have a market structure shift in the form of a break of structure there. So instead of trying to catch a falling knife, let's now investigate what is the last, on the lower time frame. Let's go to the 3 minutes. What is the last swing high? This is for me the last swing high. Let's give it another color. What color do we give it? Okay, let's go for pink. And this is for now the last swing. So we are trading inside of this range. Let me change this and this too. We are trading inside of this range. So again, if we take the fib from here to there, look how convenient that this fair value gap again falls inside of the golden zone. And this is the bottom of the breaker. So we have a lot of confluences here in this zone to take a trade. Look, bottom of the breaker, golden box above the 50% fib. This is the 50% fib in the last swing. And it's inside an inverted fair value gap. That's 4 confluences that say, yeah, you can take the trade, but, and listen to me carefully when I say we have a higher high, a higher low, a higher high, a higher low. We could easily see a higher high again. So we have to wait on a second confirmation here before just pushing some buttons. We're not playing with monopoly money here. So yeah, we leave that there. And we're gonna wait because we are interested now in trading in between these two white lines where we gonna possibly find the best setup. And let me say it like this. We take this. I have to move this a little bit. To here, because I want to see the bottom of this candle. Let me say it like this. If I can catch this trade here and we can risk the fact that we probably even, look, we still have, no, this liquidity is all gone, but we have relative equal lows here recently formed in an order block. So we're not gonna be victims of manipulation. This could be a long position too, but it's not my setup. I don't trade in order blocks because there's already a bunch of stops below here. If you would enter inside the order block, that's for me considered as a big no-no. Although there is a small gap here on the 1 minute, so there's definitely liquidity waiting to be taken, but there is also liquidity here to be taken. So let's go to the 3-minute time frame and let's discuss with Pat what is happening. So we had the higher high, come on, higher high, higher low, higher high, higher low, like I said, we could easily go for a double top and go after that liquidity. Or we see something like this happen. And that would give us a conventional and traditional head and shoulders pattern. So that's why I'm saying let's look inside of this here, because this would be a nice setup. And because the market on the higher time frames is still trading downwards, lower low, lower high, lower low, lower highs, lower low, lower high, lower low. So we're still in a downtrend, although price is going up. I'm still pro selling. So let's see, this was the accumulation, we had the manipulation, this was the manipulation here, the distribution, we had a new short-term accumulation, this is a possible manipulation and distribution to the downside. Or this can be the manipulation that lures a lot of traders into looking into short positions with all their stops above here, trail stops above here. So we're gonna wait until this zone is taken, and then we're gonna decide what we're gonna do. Because if we see price move towards here, then we're probably gonna see a higher high, because there's already buy side liquidity above this level. And if price chooses to drop, then we're okay with that. We don't do anything quickly or stupid. Sit on the hands and look what a rejection wick. It's all being taken out. Price is gonna just drop down even more. Look, we have relative equal lows here too. And this is our last swing point for now. So, like I said, this could become a possible setup. But I also see this as a possibility. And then in between the lines, of course. So we have to be patient and practice good habits and just wait. So let me stand up for a minute. Gonna drink my soup. And we're still journaling, still writing stuff down. But there's not a lot to write down for this moment. We could talk about trading psychology. Like many people many people see moves like this happen and they don't have clear rules. You know, like I have the New York kill zone open until the London close at 5:30 for my time zone, UTC +1. And then most liquidity of London will be drawn out of the market. Then we have only New York or USA that keeps playing with price. And I know out of experience that most of the time when London is gone out of GBPUSD, that it's game over. So then we start to see the accumulation, like look here. You see we had a slight move last week Friday, pushed up, but look what an accumulation. This is all ranging. This is for me a no trade zone. It's not enough liquidity to get in. This was a beautiful move, of course, if you caught it, but if you really if you see on the 15 minutes, this candle makes a higher high in comparison to this high here. It doesn't maybe break the wick, but the candle closes above the highest candle close here. So there is no point in saying like, oh, let me push the button here. Why? Because it's a double top. This is what I see. So price takes the liquidity and then the market decides to drop. Beautiful, but I rather spend my time in heaven than in limbo. And let's clean this up. Let's get back to the lower time frames. Look how beautiful. Let's take this away, because the next price level that has our interest is here, and we want to have the charts a little cleaner. This is inverted, so let's make this, and let's clean this away. And now what do? We patiently wait. First of all, in 6 minutes there is a USA meeting gonna impregnate a little bit of liquidity. It's not too much. It's not a heavy red flag CPI meeting or FOMC, but it always can give a reaction. And keep our hands clean. We wait on let me put that in its right place, the 4-hour line here, and we're gonna see if we can catch a trade here. Perfectly would be that we have the drop and that we go a bit into this type of moves, you know, and then price taking out, setting a new, and then dropping to the candle low, not in one time I assume, but and that we start seeing some upside again. But we'll have to wait, and time will tell, guys, so give it a while. And just enjoy the live reading of the market, telling you what I think that should happen, where price should react off. And it's all live, you know. You see the time here, you see clearly that it's not recorded, it's not on play, so we are reading price live. So let's wait a few minutes. Let me check my other media. answering a message of a friend. My accountant, estás por la oficina mañana por la mañana. I'm going anyway, but I'm asking out of politeness. I don't care if she says no, I'm not there, then I'll figure it out with one of her colleagues, but have to be a little polite and educated, no? Although as a business owner you just do what needs to be done, you don't care of people's opinions and if they're available or not, you just go get what's yours or you're waiting for a long time. Okay, that being done, let me quickly check this here. Okay, perfect. One, two, three videos posted on TikTok already today, so that's good. And what do we see? Look, time. I can put it back on New York. 9:45, just before the meeting. Let's see if we get an impact or not. Let's see what the market does. Probably not so much. They'll use the news event to go on some liquidity. What bothers me for the moment is these equal highs here, this white line is what's bothering me. And the purple line, yeah, but this week already took the shorts from here. Yeah, there will be liquidity, but in first I'm especially interested in this line. Why? Because retail is gonna see this as a resistance. There were lots of short positions, so there's a lot of stop losses there now. Again, let's make it interesting. There's a lot of money there. So are we gonna go back, take the equal highs out, maybe tap into one of these fair value gaps and reverse, or are we just going down? Because we're trading again above the short term 50% now. We can look for sell positions because it's above the higher time frame 50%. And yeah, we already changed that, so that's on hindsight, it's okay. So we're in the premium, so we can look to sell, and we're in premium on the short term swing. So like I said, the problem that we have here, we don't have enough confirmation. Market was bullish, formed an M pattern here on top, a double top, created more short liquidity, more people going short here, more stops above here, dropped, picked up all the liquidity out of these fair value gaps, and now we're seeing an A, B, C go after here. I don't know. The rule is, if you're not sure, don't do anything stupid. It's really simple. Learn to not overtrade, because you'll blow accounts, or you stick in break even, get 3 wins, 4 losses, 5 losses, and you're trading for nothing. It's better to wait until your setups present themselves and react when necessary. And look, what can we see here on the 3-minute chart? I didn't see that earlier. Let's check on the 1 minute. Oh, look. New York. But we see there is a wick, or in this case a tail, and there is no fair value gap above the equal highs. No immediate one, but we could interpret this also as a supply zone. This here especially, supply and demand. If you want to know more about that, you can send me a private message. I'll explain it quickly, but supply is when there is a sudden move. The point that created that move, or that was responsible for the price shock, in this case is here, but the supply zone would be here. So it falls together with the fair value gap that we have as inverted. As we said, she was from here, we can still leave that like that. So we have a few confluences that allow us to take the initiative and look for a sell, but like there's a lot of equal highs above this white line. I want to change the style of that line. Let me put that in a dotted line. So there's a lot of money here, and we have a higher low, and we have like an internal market structure. You see, we have a break of structure here. Price is again creating bullish arrays in form of an order block with a fair value gap inside. So we have to see what happens here. If you want to short this, that's up to you, but like I said, first time and then trading. But this could definitely be a good setup. I won't deny it, but then I would go and pick it like this, and this would be my threshold where if it closes above I get out early, but put the stop loss reasonably at a high. So let's see, 125, 515, I would even take that to 555. Stop loss, yes, we're gonna sell. I'm on the other screen now, the big screen. 25, 555. Take profit would be 124,248. 124,248. 248. And we use a market execution if we really want to get into the trade. I don't work with limits, I told that. I just don't like the concept of a limit. It makes you limited. Just kidding, limits are okay, but some people just prefer working with market orders. Some people prefer buy orders or buy stops, and normally I don't even put a take profit, but today we do, because it's the first time I'm live streaming, and I'm happily sharing with you what I'm doing, what I'm seeing. And let's put that manual exit line that we concluded here. If we would have a real bullish action instead of a bearish reaction, but we have to wait. First of all, time. So probably gonna wait till 10:15, 10:30. That would be ideal. Maybe we're too late again. I don't care. I want perfect setups. So this is the 125,379. Let's that's not what we were doing. Let's just 37. Look, 325, 373. And what do we see on the other chart? On the 2-minute chart, there is a fair value gap on the 2-minute that we don't see on the 1-minute, and there is a fair value gap. So the stop, just adjusting my trade, what would be the perfect entry between 373. This is gonna be the spot where we are gonna look for a sell. And yeah, that's where most people have their stop losses. For people that understand a bit about trading. And look, again we see a move, A, B, C, and then that's what I noticed in the charts. This keeps repeating this pattern. Why? Because we're already going up, no we're going down, no we're going up, and people get in on both sides, people get taken out. And yeah, this is the golden zone, but this was the bottom of the golden zone. Let's quickly go back to the swing high, swing low, from here to here, and we just quickly check, double check what we're seeing and what we're calculating. Now let's get back to the 3 minutes. That would be a beautiful setup, no? I'll definitely try to buy here, sell here, close to the daily high. If we come above, then we have a bullish trend day and its price is gonna keep pushing up. And you see, even people would say this is a reversed cup, form a handle and come down. So all these patterns, it makes sense if you know what you're watching. And some people call this even a Bart Simpson. How ridiculous. But you see the pointy hair. So, but let's go back to, look, they see this as a cup, and then this becomes the handle, the other way around. This is a reversed cup, like I said. Otherwise, cup and handle work like this, and but this is more round, of course. This is quickly drawn with the tools I have here in my quick toolbar. And we're still looking to see where the retrace is going to. Where are we gonna pick the money? Let's dive into the 1 minute. Do we have relative equal low somewhere? There's relative equal lows here, but we're still reacting out of this gap. So yeah, let's just wait and see. What is forming there? You see what I mean? This would be perfect. We're all prepared. There is still liquidity in here, so we could see a drop create another trend line where people try to go long. If it breaks below here, people are massively getting into shorts, and I rather wait on a stop loss hunt and get in a stop loss hunt, or stay out of the market. We'll make our money this week anyway. First rule is not lose money. That's the most important. Don't do stupid things. Be smart. And we wait. We could see a possible, like I said, look. This is a trend line. And then you have the breakout traders that once price comes down here and retests at this line, they'll go short there. And believe me or not, that works too. Every technical analysis works so many times. The key here, the key component is flawless execution and good risk management. And having your head clear, knowing what you're looking for, and being prepared to execute when the conditions present themselves. Look what I said. 10:05, we have the trend line. Here are ICT stop losses. People trading ICT put their stop here, put their stops mostly above this high or just above this high. And I'm speaking about the non-experienced ICT traders. They would have their stops very tight, and smart money, where is smart money? This is a strong range now because it didn't get broken for the second time. And we said on the higher time frame that this line, look, this is a strong high. So there's a lot of smart money that is gonna look to short here, or even from here. Doesn't move like Jagger, but from here, this is the smart money. Swing high, strong high. Didn't got broken, so we are trading between this high and this low. So smart money is gonna look for shorts here, and we wanna trade in line with who? With smart money and institutions. But they tend to do things, to keep retail traders, and that's what we all are. They want to keep us out of the market by not always complying to order flow and market structure, by using manipulation, or by just doing what they want to do. Like, look, we have a tap perfectly in that fair value gap in the golden zone, and tell me that this isn't algorithmic. We see the perfect reaction coming. You see this trend line, if we're gonna break, people are gonna start panic selling. FOMO, fear of missing out. And that's where we are patient, where we practice patience. Because if this happens, then we could potentially see a more upward move. And what happens is later they say, yeah, but I was wrong, because the trend line was actually like this and it bounced again, and been there, done that. Perfect setups. We specialize in buying or selling stop losses, and there are stop losses in this week and above the week too. That's why we have to make sure that if we get into a position and the position doesn't play out, that we don't get liquidated with a stop that is way too big. In this case, we wait and we see what happens. We have the equal highs. Would love smart money to see go after those highs first. And you see there's a fair value gap here. We have a quick move. We don't need the whole move. That's the beauty. We're only looking for a nice 10-15 pip setup that follows perfect the plan. Let's put this line here again, and let's just patiently wait. $4.10, no rush. Also perfect for ICT silver bullet. New York morning session between 10:30 and 11:30. So we're right in time, we're in the right place, in the right spot, and we know what we are looking for. So give me a 2-minute break, guys, and I'll be back in a second. Loud and clear. So what's happening here? Still pretty in line with what we're thinking and what we're looking at. Let me change the other screen. I'm gonna put it on the 5. There's the 5-minute 281, 281. And in Forex, different charts, different brokers. The charts aren't like in futures, they're not 100% the same. So sometimes it has benefits, sometimes it can fool you a bit, but this 302, the 300 mark is definitely, I see some price that being tapped. So 318, there's 315. It's probably a good price to get in. Let's calculate an average of 20 pips, but if we're mistaken, we're out with a 10 pip loss. If we're right, we can go after these lows at least, take 60 pips. What would be awesome, I'm not even gonna wait for that. Let's see the playbook. What was that? A bad cable connection somewhere? Can happen. I have a lot of cables connected here, so let's see on the 1 minute. Look, now we got, look how beautiful what the market is showing us. We're getting these equal highs here. Equal highs. You see this? These are relative equal highs. And we have a fair value gap here where we can expect a reaction from. Also in confluence with the trend line. See, take the liquidity here, and then we take a short position in this fair value gap or just above, because like you see, I'm gonna put this here. This was an old fair value gap and was at the base of the drop, so that's a good spot to go short. Let's see how price reacts here. This is the point that we are interested to see what happens. If we break through this fair value gap, then we probably don't have to expect a retrace there. But this is too good to be true. Really, such a perfect look. This would be perfect. No, what do you think? I like that setup. So like I said, fake breakout into the fair value gap. That's what I expect, but you never know with these markets. Expectations. We only react on what we see. Let's make this one. Look, breaking below the trend line. Trend line was already actually, let me rephrase that, trend line. This was actually already the trend line where it's breaking through. So trend line traders, they keep moving this line because it suits their illusion of the line supporting price, although it really has no. Yeah, you can draw as much lines on the screen as you want. A resistance, breaks through the resistance. Oh, there's a support, breaks through the support. But look how the fair value gaps get respected, like perfectly. Just closes on the bottom of the fair value gap 2 times, but the liquidity still is inside. Let's wait on some more volume, guys. Let's wait until the market shows what hand it's gonna play. 4:30 almost. Nice accumulation zone. We have shorts and longs, stops of shorts and long positions here. So there's definitely liquidity here on both sides. This is the 50%. I would even dare to buy here to see it go up, but below the 50 short term and below the 50 long term higher time frame, this could be a buy, and there is a small fair value gap here. On the 1 minute. It's very small, but it is there. There is a fair value gap below this, or a buy side imbalance, sell side inefficiency. In this case, this is not a fair value gap on the 1 minute. So this could be our threshold too, but it's like this morning, I'm not so into this buying position. It's too close to these, to the stops of this low, so yeah, this could be a buy for me, but then it's like a small move. Come on. This is nice. $5,000 stop loss. $4,900 stop loss. That's why I'm telling you, we have to be pretty convinced before pushing the buttons. It's actually a 5,500 stop loss, if I calculate everything correct. Yeah, almost 5,500 stop loss prepared. Won't let that get hit, that's for sure, but look, what an accumulation. The accumulation for me is actually the manipulation. That's where people try to get early in, like, oh yeah, it's going down again, get in. No, it's going back to break even. And people here are like, yeah, it's going up, I'm buying. They're buying, no, it's going, ooh, in loss. They're both in limbo. The buyers and the sellers, retail, are in limbo. People that are getting into positions here, it's terrible. And look, this started at 9:45 New York. That's the equivalent of, that's more than an hour ago, or an hour ago. You know, like here, 9:30, we're already in this accumulation phase. Been there, done that. I say no thanks. We know that this is inverse too, so we're gonna clean up the charts. Possibly, if you see the lower time frame, you see this. So there's definitely a possibility to sell to, to buy to. Wouldn't exclude that, but that's not my favorite plan. I prefer to sticking to more sensible setups, or do nothing at all. Kill zone, come on. We're gonna see some volume soon, no doubt about that. That's why it's better to work in your sofa than sitting in an office on an office chair like a 9 to 5. If I wanted a 9 to 5, I would go work in McDonald's. They at least have hamburgers there. Just kidding. But I'm not the type to work 9 to 5, so. And I love comfort. So I built my setup like this. Probably gonna extend the setup in a few weeks. Like it's an addiction. Once you start buying screens and adding stuff to your setup, you think like, oh, I need one more screen, then I see everything. Yeah, you see everything with one more screen. You buy another screen, install everything on. Everything is installed and you're trading, and then you think like, damn, if I only had one more screen, I could check this simultaneously. And I got 3 screens now, one split up, two that I can split up in three too if I want, but I have enough information like this for the moment. But now with the streaming, I'm definitely gonna look in getting one more screen, or maybe even two, just to be sure. And come on, let me call my friend at BlackRock. Tell him that he puts in, hey guys there, move that market. Just kidding. Can have a laugh now. Hey Justin, can you ask your friend at BlackRock and at Vanguard to do something? Cause this market is really not funny, man. Really, I send a message, but it's just one of my trading buddies. He trades especially Nasdaq. Traded Nasdaq for a while too, but I stopped with that. Probably if these live streams start to catch some fire and see some more people, I'll probably dive into Nasdaq again. Or maybe for the evening, I'll start using another pair to please the people that are trading in the USA. US or yeah, USD cut isn't a bad pair. UJ, USD GPY. But then, yeah, for the evening session, there is more liquidity in Nasdaq and the S&P 500, and they're beautifully volatile. They always move. There's always something in Nasdaq. Was just too time consuming in the end for me. I was working out, having long walks with the dog, trading from 8 a.m. and even earlier till 12, running my sales business. Meanwhile, more trading, following some cryptos. Had to cut some things out of my business just to spare my sanity. Now I see something happening. It's not a lot yet, but I've seen that many times before. This could possibly be the drop that we are waiting for. And no, I'm not taking this. Because the reaction on this fair value gap and this fair value gap. I'm not risking 5k on a hinge or on a hunch or whatever you call it in the US. You know what I mean. A plus only, baby. So we're waiting until those equal highs are getting swept, and then we look for a sell. probably, look, we're exactly at the 300 line. So that's a mental price tag for institutions. We dropped from 350 to below, from 25,360 to 24,680, and we didn't go back above the 25,250. We stayed here. I'm still pretty confident. Let the charts, or let the market do what it does best. Full 99%. You see, started to break out. This is what I said. This is what retail sees. This is what retail sees as a trend line. Oh, it breaks out. People are already selling, people selling. Oh, people selling, people selling. Oh, this becomes resistance. Look, price can't get through it. Price can't get through it. We got more equal highs here. I'll probably get in at the top at 25,240 and call it a day. If we go above 350, and because I operate with market executions, I can better time my entry, more specific to my personal psychology and my needs. So if price drops from there, I'm okay with that. I'll close the charts for today and go out, have some fun. Spend enough time for a Monday in front of the charts. And look, I called my friend, I told him to advise BlackRock and Vanguard to get into the market, and look, you see some movement. It really works. Just don't believe this. Would be too funny. Have an insider there, but that's inside trading. That's illegal. We can have a life now. Wolf of Wall Street type of shit. Come on, price. If we go in accumulation now, there's potentially a move for the New York afternoon session, but that's gonna be a late one. Maybe I'll check it out. What time is it? It's 4:45 here almost. Let's see what we get, because we've been very patient today. And patience pays. And I mean, like, patience pays the trader or the market maker, so somebody's gonna get paid. Prefer it to be me and you, but who knows? Come on. Give us a nice push up. Go after those equal highs. Let's go after those equal highs. Come on, chop, 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 market. You all know this one. I like this one. Write it down for you guys. Let's do it like this. Show me the money! Like, you see, if you would be operating out of a position of need, if you really need money, then trading is really dangerous because you're mentally affected by the fact that your subconscious is telling you, like, we have to make money, we have to pay the bills, we have to make money, we have to pay the bills. If you don't have that issue that you are in trouble, or you live with your parents in the basement or on the attic or in your room, or then it's pretty easy. If you have to pay bills like I do, and I have corporate bills too, so then you gotta be pretty sure of what you're doing. And like I said many times in this live and in the live of this morning, patience, consistency, A plus, 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 plus setups only, good execution, good trade management, and it's all possible. But we don't have the power to move the price because we're retail, and your lot and my lots are not gonna move price at all. So we have to wait until the institutions play their hand, until the market shows its real character and real face for today. We had a good session this morning, a pretty clear reading, pretty accurate. We could have gone short, we could have taken the long. So skill wise, pretty confident in myself. And the more I'm trading without actually pushing the buttons, the more candles I see pass by, the better I get in what I do, because I can read every candle in the light of what the market wants to do. And for me, it's doing perfectly as expected. Don't care that we have a trade or not. Being a trader doesn't mean you have to be in a position. It means taking action in the right time. When you got all your confluences. And if it goes wrong, if the trade goes against you and you lose and you followed your plan, you stuck by your rules, you had a good execution, a good risk management, and you did everything perfect and you lose a trade, well, I'll still call you a great trader. And myself too. I'm a good trader. Self-confident, over self-confidence sometimes. But that can become dangerous too. And what I was saying a little bit earlier, if you really need to live from trading and you are facing the fear of missing out, the fear of leaving money on the table, greed, then especially in your first, if you're new to trading, then I wouldn't advise anyone for starters to start trading as a job, because sometimes it feels more like a curse than a blessing. It's a blessing in disguise, of course, you know, it's an unlimited supply of cash to be taken out of the market, but it's also sometimes a vicious monster taking cash out of your pocket. And the money is one thing, but the self-esteem, the self-confidence that you have, the market can really break you in a few minutes. Everything that you thought you knew, gone in matter of seconds. And that's okay. Trading is not for everybody. If you can't cope with losing, then this probably isn't your business. Like the book of Tom Hogarth, best loser wins. Yeah, trading is the best loser win. But the question is, how many times do you want to lose in vain? Because I've seen so many possibilities today to push the button and I just don't. It has to be perfect. And yeah, then sometimes you miss a good setup, but you also miss a lot of bad ones. And if your win rate goes up and you make less mistakes and you can then adjust your risk reward, then we'll get you in profit soon. Look, beautiful. And there's somebody else working in the office, so if you guys hear noise on the background, then you know what it is. This would be so beautiful. A retest even, a breakthrough, a retest, take out all the liquidity here. We want to see it wake up and then on the 5 minutes fall back down, give us a new entry. That's also a possibility that we wait a little. Come on, stick there. That we wait a little longer. Yeah, I have too much clicks here. That we wait a little longer. That's what I was saying. Until we get the equal highs taken, if we get the equal highs taken and price drops, gives us a new market structure shift, an extra confluence, and we get a break of structure on the higher time frame, then this would possibly be the most safe setup. And playing safe is okay in trading. Write that down. Better safe than sorry. That's the next quote for the trading board. Better safe than sorry. My mom always used to say that because she didn't want to become a grandmother, but that was a whole other story. I was, my young years, a little bit a wild one. So, rather make fun though, and have a laugh with it. This is such a boring order flow. I'm gonna quickly go to the bathroom. See you in a minute, guys. What's happening here? Nothing. Here we are again. Oh no, let's see, it's 11. It's perfect for perfect timing, 11. Europe getting out of the market, Brussels, Berlin, Madrid, Paris, Milan closing. That's a lot of volume out of the market, and yet they trade GBPUSD and GBP Euro. That's a nice pair too, GBP Euro. Sleepyhead. Is the Whitey a sleepyhead there? Yeah, good girl. Good girl. Attention. Yes. Straks gaan we buiten. Nog wachten. Yeah, you have to wait. Let's see. We're still trading in the big golden box. And the 5-minute chart shows a little move up. So that's good. But like I said, look on the 15-minute, we can clearly see higher high, higher low, higher high, higher low, higher high, higher low. And this move, I don't consider it as being played out. So like I said at the beginning of this live session, we could possibly even see price going to higher highs, because this candle here, this move, that was definitely a manipulation, a big sell-off. And there was no big news event. Oh, it's a little surprising, but yet why I'm not surprised. This would be the perfect setup to get now. And we don't even have to take this take profit till here down. If we can take these, this low and this low, that would be pretty awesome. And let's analyze the candles. You see the last bearish 15-minute candle closed below. We opened at the same price and we closed at the same price. So we are respecting bullish flow. So We got our trades prepared, so no panic. What price did we say? 379 would be perfect. 379 or 383379. Let's see how this plays out. But we're seeing some more volume. What does a 30-minute say? Let's take this away again. Look, higher high, higher low, higher high, lower low, lower high and lower low. This can count as a market structure shift. I think we had that on our chart. Right, have that in templates. So we can see this as a market structure shift, so the short is definitely a valid position to take. This is a change of character here. When it breaks down, it's a valid order block with fair value gap. Take out the high of the fair value gap and reverse. That's what I'm looking for. Let's use this line as a 240. I want to see the 240 here, because this is the breaker also. So if we trade just above here, I'm getting in. Not because I'm bored, but I have enough confluences. Even this is not a bad trade, because you see lower low, lower high, and from here could even go down. You make a double top, but I want to see these equal highs taken first. That's for me the signal of go or not go, because there's already a bunch of people short here. A lot of retail push the button here, go short. The first people in the fair value gap, ICT traders, to go short in this gap. A lot of people waiting with sell orders, and there's a lot of people with buy orders at this was, look, this high, and this high. Many people are gonna see that as a resistance that gets broken, so it becomes a support, but the support gets broken, then it becomes resistance again, gives a reaction, becomes resistance again, gets broken. So this is a support resistance, this is a support line. So many people have orders, buy orders in this range. Also ICT traders with entries here, stops here, and smart money is definitely looking to buy here. That's why I'm saying if we can catch this move, and we don't even need the whole move, we only need to get our pips out of the market. That's all that matters. Smart money will be buying here again below because there's stops, and they buy those stops. Doesn't mean that if the market comes down here and smart money starts buying the stop losses of the people going long, that we can't see the market push down below this low, because we have New York midnight unmitigated. But this is a beautiful setup. Really love the ID. I'm in for the ID. Take out the highs. Nah, this fits my plan, so I can take the trade if these equal highs here getting taken. If not, then it's not our trade and we respect that. Look, more equal highs. Serves as what? As a resistance level now? Let me erase this because it's bothering me. I'd rather have it small. This line now serves as a resistance while there's still liquidity in the fair value gap above all these early positions. I'm good. I'll practice my patience. And look what's been created here. We have a small buy side imbalance, sell side inefficiency here, created inside the gap, giving reactions. So, like I said, patience is the biggest key that we have. Patience and self-knowledge. Because I remember how I used to trade. I would be like, oh, but it's going down, and I would already be in. And then later regret being in drawdown for what, 4 hours? Nah. My friend reacted, he can only call his friend at BlackRock for Nasdaq. So, but he's kidding too, of course. He's 200 pips in plus on Nasdaq. Good trader too. So, let's see. Okay. Once there is some more animation here, I have a Discord group completely for free where we can chat, or you guys can chat with experienced traders and learn, because it's important to learn, and it's even more important that you learn from people that have no interest of cashing on behalf of coaching. A trader, his business is trading. If you can't coach and teach because you love doing it, then your business isn't really trading but coaching. And if I want to learn how to coach, then I follow a coaching course from a coach. If I want to learn how to trade, then I follow the advice of traders, not of coaches. Yeah, sounds weird to hear, but people selling you courses have a conflict of interest, because if you get profitable, they lose a recurring client. Then why am I doing it? Because I have my interests too, like build my own brand. That's another story, of course. I got a lot of business ideas for the coming years, and Hertz is one of my projects, and that has nothing to do with selling coaching or trading. I got my basic course already almost completely for free online on YouTube, and working on an advanced course on how to read the market, what to look for, better entry models, and that's what I want to do. That's what lights the fire in my soul. If I see what some traders managed to create without selling courses, that for me is truly inspiring. And come on, market.
¿Estás grabando?
Sí, todo el rato.
Ah, pues va a sonar ahora un poco, ¿eh?
¿Ah?
Va a sonar un poco, digo, la cocina.
Ah, no pasa nada. Es lo que hay, ¿no?
Es un momento.
Okay. Yeah, you hear me speak Spanish. That's probably because I live in South Spain. So the people here are Spaniards and they speak Spanish. So, and now we're getting closer. Look what patience has brought us. Let's make this yellow because I want to see. I took the line. This should be white. I want to make this here yellow, that we see the difference clearly. We want to see the fair value gap on the equal highs. We don't need to see a lot of move. This would be perfect if we see something like this happen, because more people will expect more bullishness, like, oh, it takes the fair value gap and it's going up. Take out the stops here then start a reversal, and this is where we get in. We're not gonna get in on the top today because we need, in this type of market environment, we really want to push ourselves to the limit, but not of our capital or our funds, but to the limit of our patience and of our rules. And the rule says if we ever close above a tap and it goes up, we don't even want to be in the market. A day without positions is a winning day because you didn't lose. Creating good habits is a winning day because you're working on your skills, on your market examination and evaluation, on live tape reading. You're practicing good behavior, and that gets rewarded in the long run. So, done. Step 3 of 3 taken here. I'm working meanwhile on something else. So we're still patient. First of all, congratulations to all traders that didn't got caught in this mess, because that's what it is. This is one big mess, and we missed this move in the morning. So most traders that missed this move and then missed this move, you know what happens? They knew it was gonna happen. I didn't know this was gonna happen. I called this one, but this was a little unexpected, this move for me. I thought it could go into the breaker here, but it crashed into the deepest lows. You know, if we see it crashed perfectly into the 90%, like that's crazy. But imagine if you were not an experienced trader and you see this move happen and you missed it, and then you miss this move too, and then you get into limbo, you get pulled in a few times here. Oh, it's going lower. Oh, I'm selling. No, it's going higher, and you're over trading. You miss this good move, and then it's going up again. It's very bad for you're inflicting trauma on yourself by clicking the button too much. It's the worst type of behavior there is. So congratulations to all that had patience. Congratulations to myself, of course, for spending all these hours here in a live. Seems I keep gibbering or rattling or what you call it in English. I can keep speaking, so it seems, so that's good. Definitely motivates me to make more content. Come on, take this prize and give us, show us what we want to see, market. Be kind. The market ain't kind, but that's okay. See, almost closed. And the best thing is, we know if the market chooses to pick up orders now, then it can go very quickly. What do we have here? I'll only look into this. If I can get the 2.5 out of the market, that would make me already very happy. A quick in and out. Let's calculate the pips here quickly. You see, that would be 30 pip move. Don't even need so much. And it would be a 15 pip stop before we exit manual, but I have there in total a stop of now on 4,000 in the red, 4,000 plus in the red. So let's focus now on what's happening. Let's check the other. You see, pushes through, so this becomes a dangerous place, but the equal highs are taken. I want to see it take the high of the fair value gap. And if we close below, because we're already seeing, took 100% of the fair value gap, so we could enter, but we're now looking here on a break of candle. A break of candle here would confirm that there is coming, then it becomes an order block, and you can expect a fair value gap to be formed to below this liquidity. But with the little volume we're seeing, and I got the 5 minutes here, I have the hour chart. The hour chart is bullish. The 5 is bullish. Let me put this on the 15. On the 4. Took all liquidity out. Has more of a bullish. If you check the 4-hour can, let's do this. This is the whole reason of this channel. If you see the candle, let me change the color of the wicks so you see what I mean. You see the wick of the last H4 candle comes completely down here. So all this liquidity has already been taken, and we have a double top here. So there can easily come a higher high here. So I'm gonna be very careful with my short position. Just sharing what I'm seeing. If you see the hourly chart, you see this would be our position, but perfectly into the liquidity of this tail here and taking out this high is perfect, but we want to take this short with more confluence and play safe, be good trader. Look, suddenly the volume pumps in and everybody going short here is now in drawdown, and if you enter with as much lots as I do, then this move from here to there makes you pee your pants in 4 seconds. Not really, but figure of speak, of course. You know, look, let's see this on the 5-minute chart. Imagine we click the button here and our stop is here. You're already almost out of the market. And the real stop would be here at 555 is where I put my real stop. So I have time to manage my trade, and the pink line here would be my manual exit. So I already would have to exit the trade. And let me check, on an average of minus 11 pips. That's not funny. What is funny is all the equal highs are taken and there is more liquidity here below, so we're still in for the position. But we have to be patient, because if this would be the stop loss, why? Because this is the high, so retail wise there's a lot of, this is seen as a resistance now, so there's a lot of selling gonna happen here, but there's already a bunch of stops above. So like we said, there is what above here? Money. And those are equal highs too, so let's wait a bit and see if this gets tapped. Then look, this fair value gap can go. This equal highs are taken, so we make the chart a little more clear. This becomes now the entry zone, and we have a fair value gap here. Want to see that react, give us one more tap, and then we want to see a 5-minute hammer. If we get a 5-minute hammer, look, it's already forming. Let me take this away. Oh, it's a doji forming. Let's see the candle, how it forms and how it really plays out. Kill zone is closed, we shouldn't trade anymore, so let's see what the 5 minutes says here. Then we put the 3 minutes. The 15-minute is trading inside the order block here, and there's a small 15-minute fair value gap, and there's a lot of sell side liquidity, but nobody says it has to be taken today. 414. Can't do that in front of the camera, Davey. Yeah, my name is David, by the way.
Se acaba de acabar el gas, de la cocina.
No pasa nada. Why would the 414 be interesting? Problem here is again the 500 level, and that would be the high of the day. The high of the day gets taken, and that coincides with a lot of highs. But like I said, for the moment the 414, the 414 is what I'm looking to. And I probably don't trade anymore today. Didn't even trade today, so well done. Drop down. Dear market, we are not affected by your manipulation games. $5.55, so you see, take here. Then starts dropping. That's a possible sell signal, but for me the kill zones are closed, so I'm gonna close the chart in a few minutes. Been streaming for 6 hours today, so I think that's a good start. Let's quickly check what our precious XRP is doing. Ooh. We have to log in again. Okay, let's do this. It's gonna probably ask me. So now we need. I knew that it was gonna ask that. And I have that on another. Like this. Done. Still checking. But this is looking okay now. I like that. We have the wicks, we have 1 wick, a lower wick and a higher wick. If we see a candle close on the 4 hour here above, and you see it's taking out a lot of liquidity out of in the form of fair value gaps. This one seems to react pretty well, so I'm leaving that on my chart. This liquidity is gone, but I'm gonna wait until we have a close above that fair value gap to consider it. Look, we're looking into, now we're talking, we have a nice new fair value gap being formed there, and this is respecting this fair value gap is being respected here. I could see that without even checking. So it looks like we're going up. But I look only cryptos on the macro. Sometimes I trade here if I see a good setup, but I'm more interested in long-term crypto. And see, if we see this push up, then I want to see a candle close here at this level at 284. Like from here to there. That would be nice. And if we can see this candle or one of the next candles close above this line, then on the macro for me would be a bullish confirmation. Not to buy or not to sell, just to follow the market. And let's get out of here, because we see some action. Let's see what's happening, ladies and gentlemen, at the end of the trading day. The New York Yankees hit a home run. I don't know. I don't know what I'm talking about sport-wise. Don't care, no time, and have other things to do. Come on, put the thing back on. Sometimes happens. Okay, perfect. It's a little bug in the system. Now, technically, if you have a close below this fair value gap, that's the inverted fair value gap strategy. I don't like it so much. I tested it like half year, some over a half year ago. Like was somewhere April, May. I was testing that and it cost me a lot of money, to be honest. Sometimes it works, sometimes it doesn't, like everything, but it wasn't just my setup. I like them as an extra confluence, but not to base my trades on. Sometimes you do it automatically because it's in confluence with your setup, but I have my A plus IDs and you've seen me stick to what I'm reading in the market. Could have taken the trade on this fair value gap here. We didn't. Why not? Because we just didn't. We're still waiting. It's just a weird market today, so see this here also, like we're getting a higher high, a higher low, but with so little volume. Higher high. Are we gonna get a higher low again? A new higher high, new higher low? Who knows? It's so unclear. Can't trade on the market like that. Don't care. We'll make money tomorrow or Wednesday. I got 5 on. Nah, we're now gamblers. Yeah, we are gamblers, but it's not like red or black. Looks like that. But it's all very calculated. And like when I would get into a position like this, I would probably sell here. Then I would probably sell more here. Let me make this stop a little bigger so you understand. Then even if we get to this high, I'll be selling at this highest high at this top of the wick. And from there we have two ways how it goes. Our price keeps going up and goes above the wick, doesn't retrace and reacts accordingly to the PD array that we are following, and then I close my trade and take my loss, and I write in my journal I was wrong good trade, stick to the plan, follow the rules, was an A plus 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 setup, so it's okay. And I don't lose a minute of sleep over the loss or over the money. If the trade from here, and let me first take this away, so you would see this, what I mean, you start seeing this type of moves. If the trade then breaks below here, comes back up, then my come on, leave that arrow. How many times do you want me to click on that motherfucker? And then I would put my fourth position there. This isn't what we're gonna do today, because it's almost, we're way past our kill zones, so no trading. But this is how I built my position. And many traders are gonna say, yeah, but you are entering the market without triple confirmation, and I need to do whatever I want, how I see my setups, that they stick to their rules and to their plan. I'm okay with that, but I play the game a little different. We don't need to wait if we have our confluences that tell us this trade as the perfect confluences, and we feel confident and we start clicking the buttons. Then we have a good position here, a good position here, the best position here, a good position here, and this is then actually the worst case position. It means once price takes, let's say price does this, and price comes back to here, then we wait, because we don't want to be tapped out and lose all these beautiful positions. We wait until this happens. And for the people that don't have enough confidence, if I say, if this happens, this position can be closed here on, look, let's count, on an average of 10, 12 pips. That's already more than what the average person in Europe makes in a day of hard work and labor. If you do that only with one lot in a 10k funded account, you'll start making nice money. Now let's take that away, and let's say, so this position, we took that position out, and we have these three positions left. Once this happens, and you can see that in the course that I posted online, once this happens, and we are now on the 1 minute, but if this happens on the 5 minute, you're gonna see that this move was in fractals. So once it breaks below here again, then I need one more, this time they close it. Once the fractals show us the intention of the market, once we break below this point, we put the stop in break even. Worst case, we have the 12 pips from the first position. We'll have the, look, this can move, we have to clean up the chart anyway, so we'll have 15